I look at the notes from all of you today, and it sounds like you're growing more and more cautious on where we are and, more importantly, where you think we could go.
Yeah, I think that's right. I've been raising cash. I've been consolidating positions. And my thinking is pretty simple, that we're going to get a vaccine. The timing's uncertain, but assume it's by the end of the year. But it's not going to be distributed on a mass basis till next year. In the interim, we have something that's much more potent for the headlines, and that's the election. And if you take a look at what happened in 2004 with Gore Bush, the election wasn't decided until mid-December. From election day to mid-December, the stock traded down 8.4%. So we've got a market that's on steroids. I think you can continue to see issues in the market from trade policies coming out of the administration, which is really gutting the technology sector, which has been leading the market. We saw more today. They want to call the CEOs from Google and Facebook down to D.C. again. So that is the current administration's platform. Let's get tough on trade. Let's get tough on tech. So it's been disastrous, or could be disastrous, going forward.
Okay.
Then when you take a look at valuations, they're very vulnerable here. So to me, if I could be 100% cash, I'd probably be that going into the election. The one caution that I have is that there is some movement on a stimulus bill, and that could give you a nice pop to the upside and overcome what I've said in the interim.
So, Court, I mean, I feel like we have a debate set up here. You know, Weiss is cautious, if not downright negative on the market. Said if he could be 100% cash right now, he would be. Is that your point of view as well, or are you not as worried about where we are and where you think we could go?
You know, I think, first of all, hey, Scott, it's been so long. I've missed you. I wanted to, it's funny because Steve and I sometimes are on the same side and sometimes we're not. I think here, though, the difference might be time horizon. So for me personally, I have been picking up. I've been buying a lot of names that I like, some that I didn't buy when I was actually recommending that the viewers should buy, and so I'm buying them lower than hopefully they did. But my time horizon is much longer. I can sit on many of these names for as long as I want to, which is different, right? It's funny, I was talking to my head of global trading at Loop Capital today, Chris Levin, and he actually feels the exact same way that Steve does. He said if he could, keep a ton of dry powder and over the next 6 weeks pick up on some dips, he would. I personally have been picking up on the dips of the past on some of these tech names that I love that have been just really beat up, and many of them have come back pretty substantially. Some I didn't get as low as I would have liked. Some I kind of paced myself in, but I even bought Apple again this morning.
Right.
Scott. So, I think it's a matter of where you are, what your risk tolerance is,
hey, Court,
how you're using your capital.